Hello and welcome to the Monks Investment Trust Update. My name is Spencer Adair and I am the manager of Monks. Now in this short video, I'll update you on our latest performance, how we're positioning the portfolio today, and how we're remaining reward seeking as we pursue long-term capital growth for shareholders. The purpose of Monks is to compound our shareholders' capital at attractive rates over the long term. It is pleasing to note that in the year to the end of July, the portfolio has delivered a net asset value and share price return of around 16%, outperforming the index by 3%. This strong progress over the last 12 months was driven by contributions from a reassuringly diverse collection of shareholdings, including cloud software and services company Cloudflare, the heating, air conditioning and ventilation equipment installer Comfort Systems, and the social media and advertising giant Meta. Amongst the most noticeable contributors was DoorDash, the US food delivery company, which has grown to dominate nearly 70% of the market and process an astonishing 640 million orders every quarter. The company remains ambitious and is growing into new markets and grocery delivery and is expanding overseas. Now, of course, not all companies thrive all the time. Enphase, the provider of solar energy systems, suffered from a deterioration in the regulatory and political backdrop. Unhelpful developments occurred at health insurer United Health, where poor results were compounded by a withdrawal of guidance and the replacement of the CEO. Now, where we believe that these challenges will be long-lasting and will impact the compounding potential of the holdings over the next several years, we will simply sell and move on. But in balance, overall performance was positive, both in absolute and relative terms. President Trump's dramatic announcement of the Liberation Day tariffs in April this year stoked market volatility, but served to amplify several longer-term trends. Interest rates may remain higher than expected. Global trade is very likely to be more fractious, and populism remains on the rise. Amidst this, we strategically repositioned the portfolio. For example, before Liberation Day, we shifted focus from Western brands reliant on cross-border trade, such as Adidas or Estee Lauder, and instead we were leaning into and buying domestic consumption stories, like in China, where we have new investments in companies such as Mutai, the leading baijiu spirits manufacturer. We are deliberately positioning the portfolio to thrive amid elevated levels of uncertainty and building resilience against a widening range of potential scenarios. Specifically this year, we have moved away from companies where the investment case relies on high levels of discretionary spending. For instance, we've sold Yeti, the high-end drinksware company, and Norwegian Cruise Lines, the cruise holiday operator. Enhancing the portfolio's resilience does not mean that we are defensive, not for one moment. We are opportunistic. We have continued to lean heavily into areas where we can see long-term, structural growth regardless of the geopolitical weather. Artificial intelligence, AI, is revolutionizing industries, and we are at the forefront. The way that software code is being written and developed has already been transformed. And Monks has an intentionally wide and varied exposure to companies that power, that build, and that benefit from AI. From semiconductor businesses to enterprise software providers. We have been also active in recycling the trust capital. We have trimmed successful holdings like Spotify in music streaming and Mercado Libre in e-commerce to reinvest in the likes of Uber, that is poised to transform urban mobility and really accelerate its growth, and strengthened positions in Royalty Pharma, in drug royalties, and B3, the Brazilian exchange operator. These all enhance our growth potential, and they broaden the portfolio's base of growth drivers, and they reduce our valuation premium. Now, the valuation premium is now at its lowest level in several years. In fact, it's almost at a decade low. Importantly, we have not compromised either our growth expectations. The portfolio is forecast to grow around 40% faster than the market in the years ahead. Nor have we compromised on the quality of the businesses we own. Our portfolio holdings balance sheets are fortress strong, with low levels of debt, while margins and returns are superior to the market. So our performance is promising, but we're focused on the long term. With increased net gearing and a steadfast commitment to strategic buybacks, we are set to maximize shareholder returns. We have continued to upgrade the portfolio. It is financially resilient. It captures a really broad and broadening range of growth drivers, and it is set up to deliver superior growth for a valuation close to a 10-year low. Monk shareholders are well positioned to thrive across a variety of scenarios in the years ahead. So thank you for your continued support, and join us on this exciting journey by visiting our website for more insights at monksinvestmenttrust.com.